Hello everyone. I want to start off by saying thank you to everyone who subscribed and helping me reach the first milestone of 100 subscribers. I haven't posted in almost 6 months because life got in the way. Uh, yeah, I don't want to get into details, but life got in the way is the short story. Uh, yeah, again, thank you for subscribing. I hope from now on I'm gonna put a lot more content on the channel. Hopefully, at least once a week, but I'm gonna try to record something even more often. So let's start by looking at some charts because most likely that's why you're watching my channel. But actually, before that, I would like to make the first announcement that when I'm gonna reach 1,000 subscribers, yeah, I'm gonna do some sort of giveaway. I'm not sure what I'm gonna do yet. The easiest way is probably to send you some small amount of Bitcoin, something like that. But I have a lot of work to do to get there. But again, if you're watching this video at 1,000 subscribers, I'm gonna do a giveaway. It's gonna be my way of rewarding everyone that has been watching my videos and subscribing. And with that out of the way, let's look at some charts because that's why we're here, aren't we? So let's start with my favorite precious metal, alright? Silver. My last video was about 165 days, right? So it should be probably around here. Yeah, in June, somewhere in June or early July. This was my last video, and I think I have drawn these lines, free sketch, free drawing, with my prediction what's gonna happen with silver. And yeah, there was a higher probability that it would go down. Again, I watched a few YouTubers, a lot. They are a lot more, you know, research powerful than I am, and they were calling for $18 silver, and their reasoning was really good. I mean, economy overall was slowing down, ever since last, call it November. Over the last year, yeah, economy was slowing down, the Fed starting raising interest rates, and the dollar went up. Strong dollar is pretty bad for gold and silver, and as you can see, since the dollar pulled it down, both gold and silver are up. So I think inflation can affect gold and silver prices, but only over the long term. Short term, DXY, the dollar index is the most important. I'm not saying the only, how do I call it, indicator that gold is going up or down, but it's, in my opinion, is the most important. I mean, they can both go up in the same time, but on the short term, the dollar index is the most important, and we can see right now, dollar pull down, gold and silver shot up. right now, I don't know. It seems like the dollar index is doing a battle here at the 200 daily moving average. There is probably some volume in this area, so that means some support for the dollar if it doesn't hold that support, but which I'm actually expecting not to, because tomorrow or the day after tomorrow, something like that, the Fed is gonna decide on the interest rate hike, and it's probably not going to be 75 basis points again. The market is probably expecting 50, but it all depends on the CPI print, which is gonna be, I think, tomorrow. Let me check that. I'm gonna search for an economic calendar. Okay, let's pull that here. Today. No, so it's probably tomorrow, the CPI print. Yeah, tomorrow we're gonna have the core CPI. All the CPI numbers are gonna be printed tomorrow, and we're gonna see if CPI is below or at expectation. They are forecasting 7.3% year over year, and also core CPI is really important. If this doesn't go down, I think the Fed might raise by at least 50 basis points. And I think CME, Fed interest rate probability, something like that. Fed watch tool, it's called, yes. The CME Fed watch tool. Yeah, so the market is expecting, what's the current rate? Yeah, the market is expecting actually, yeah, 50%, yeah. Because right now we are at 3.75, between 3.75 and 4. So 50 basis point hike, which is 0.5. Yeah, current target rate is 375 400. So a 50 basis point hike would be from 425 to 450 basis points. So 4.25% to 4.50%. So there's a 74% probability, but this is probably gonna change with the CPI print tomorrow. Although we do have PPI numbers, but they came out last week, I think, something like that. Yeah, probably last week. And they were above expectations, but going down. It was going down. I think it's 7.4. It still went down year over year, but it was above expectations. Expectations were, I believe, 7.2%, and it came out at 7.4. So overall inflation is slowing down, but prices obviously are still going up. As long as we have inflation, prices are going up, and that's why over the long term everyone should own gold and silver. I prefer it in coins, obviously. If I want to speculate on the stock exchange, I'm gonna buy miners, you know, find if you want to buy individual miners. I think I already have a video for Centamin. I think they are a very profitable gold miner. But if you don't want to risk it with a particular company, you can always go to GDX or GTXJ. And again, this is the way to leverage the gold and silver moves, because I mean, simple example, from the bottom, 28%. Actually, yeah, I think silver went up a lot more. Let's actually pick the actual bottom, 32%, and compare it with silver juniors. I think silver did a lot better. Yeah, it's actually the same. But overall, yeah, if you want to speculate with silver, I don't know how comfortable I am buying the CFDs, at least because we all know the LBMA and stuff like that, they don't have the silver and they might default on it. But at least if you buy an index fund, you have a claim on the companies that are mining, that actually have the silver in the ground. So I think it's a lot I think it's a lot better to buy the index funds than the futures contracts or whatever derivative of silver, because they don't have the silver. At least most miners have the silver. I don't know if you're following there, but that's my opinion on it. But simply put, buy coins, hold them in your back pocket, and if you want to speculate on the stock market, find some junior miner or something like that. But again, it's speculation. Gold, again, both gold and silver are doing very, very well since the year to date. They're basically at the same price. Let's see, gold was at what? 18, 20, call it, and it's down what, 2%. Silver is same price, right? Almost same price. So year to date, gold and silver, obviously they had a drop mid-year, during the summer, but year to date they are doing a lot better than the stock market, I believe, right? Let's see, January, yeah, the stock market is down 17%. I mean, the SP 500 is. But that doesn't mean you cannot, you shouldn't find value in the stock market, right? Because you can find really good companies like Intel, like HP. I think right now Alibaba and Facebook, they're really good value if you look at their financials. Obviously, that's how I'm basing my value. Take a look at the cash flows, take a look at the debt levels, compare them with the cash flow, with the market cap. That's how you find value in the stock market. I'm not just a gold and silver And I don't like to call gold and silver investments. They're insurance, and everyone should have insurance, right? You have a vehicle, you buy insurance, and you hope you never have to use it, right? Because let me tell you, if if the world turns into us having to use our gold and silver, it will not come without pain on the short term. It will come with a lot of pain, and I think you need a lot more than just gold and silver. I think you need some cash, because look, if pull comes to shove, a lot of people lost the connection to gold and silver, and they're gonna probably have a lot more faith in cash. It's probably not, it's not a certainty, but diversify. Actual cash. Don't keep it. If you're preparing for the S to hit the fan, you gotta have some actual cash. Some paper currency. But the probability of that happening is low, of course. It is higher than it was, let's say, 3 years ago, 4 years ago, because especially here in Europe, we have the war at our border. Anything can happen. It's not impossible, so it's not a 0% probability of World War III, which would be extremely terrible. Of course, I want peace. I would like for every single dictator in the world, and yes, Biden, Trump, Putin, Xi Jinping, they are all dictators for me, or the European leaders. They are authoritarians, and they lust for power. And I am preparing to have an easy enough future. I'm buying gold, I'm buying silver, I'm buying stocks, because there is not a 0% probability for war, but there's also not a 100% probability of war or something bad happening. I want to diversify, and I'm trying to find value in the stock market as well. Right now, for the past let's call it 18 months, I'm watching this channel on YouTube. It's called Everything Money, and they have a really good how do I call it? A really good process of identifying value in the stock market. And basically, whenever you see me doing a company analysis, I'm using their process because I learned a lot from them. They are very objective when it comes to individual stocks and to stocks. Basically, they don't really care about gold and silver too much, but they do know how to find value in the stock market. And I think overall they are pricing, they are a lot smarter than I am, They are pricing the fair value of the stock market by taking into account GDP numbers. They are pricing the fair value somewhere around 2400, so if S&P is coming home at this rate, in the 2400, it's actually all right to buy the index, because you're not, when you're buying an individual stock, you are risking a bit, you are risking something, because it might not go well. With an index fund, you are diversified. So far, I have not bought the S&P. I have it on my watch list, if it comes down at the fair value, and again, fair value goes up with time if GDP goes up, let's say, if GDP goes up with time, the fair value of the stock market should go up with time. So yeah, right now it's at 2400. If it, let's say in 1 year we're gonna go to 2400, maybe the fair value is gonna be 2500. Yeah, so I'm gonna be a buyer if this trend keeps going down. And now that I'm watching this this support resistance line, we can see that it's a fairly this is a fairly organized downtrend, and we have a few reactions from this trend line. It acted as support, a bit of resistance. Now we'll see if this holds as support. I don't think so. I don't think so, because we this line is extremely important. This purple magenta line is the 200 daily moving average, and yeah, it got kind of rejected here, rejected again here, and now this looks like another rejection over here. So I would not be surprised if we see the SP 500 like doing something like that. I would not be surprised, something like this, because like 200 daily is gonna do something like this over time. If this is an orderly downtrend, probably this is what is going to happen, and we're not gonna have like a quick capitulation, something like that. We're gonna have a time-based capitulation. So the longer this downtrend goes, I think the better it's gonna be for the stock market. So yeah, basically put it on the watch list, and if it keeps going down, then my target is below 3000. I'm gonna probably start looking at the S&P, like seriously looking at the S&P, and to accumulate. Again, I'm not rich. I have a 9 to 5 job. I'm trying my best to set up my future. I don't want to depend on the government to raise my pension or something like that. I want to be as independent as I can possibly be. So with that said, this video is stretching about 23 minutes, and that's a bit long. Yeah, thank you a lot for watching. Thank you again. Thank you to everyone who subscribed to my channel. I mean, if you're watching, it doesn't take much. Just uh, help my channel to grow. Just click one button. You don't have anything to lose. I think you might have some information to gain, but yeah. And also you might win something at the 1000 subs giveaway if you're interested in that. So thank you for watching, and I'll see you in the next video. Bye guys.